trading at its best.
I am Mike Swanson. I've been doing these webinars, these weekly webinars for, it's probably been like 6 months or so, but I've been teaching traders and running my websites for about 5 years, and I've been trading for about a decade now. So we've got a lot of good stuff to teach you guys. And today we're going to be talking about the top 3 Forex myths. I'm going to be teaching you the popular misunderstandings in Forex, the truth you must know to succeed. I think that's some things you're going to learn today. You might already know, but it's good to always have these things in mind. And those of you, if this is new, pay attention. Even if it seems simple, make sure that you're not making these mistakes or following the crowd with these myths and these problems. And then this is just going to be a short training today. We're not going to go into any charts. It's just going to be a couple things I want to go over, and then I'm going to open it up to the Q&A, and that's where we'll spend a lot of time just making sure this all sinks in. So, sound like a plan? Okay. So let's take a look at what myth number 1 is going to be here. A small stop loss is always best. Okay? This is a myth, and let me tell you the truth. You can risk the same amount of money with a 500 pip stop or a 50 pip stop, or even a 2 pip stop, a 10 pip stop. It doesn't matter the numbers, but the idea is don't let the pip size, the size that the stop loss has to be for a trade, don't let that worry you on how much money that you potentially could lose on a trade, because it doesn't. That is not the only thing that makes the calculation. It makes it make sense. Let me just give you an example here. Okay, so here's an example. If you have a 500 pip stop, which some of you would think there's no way I would ever trade with that big of a stop, or you never would want that big of a stop. Well, you might have skipped out on a really good trade that worked out great and maybe made 1,000 pips, but you skipped it because you thought that meant you would be risking too much money. So let me show you the other component. It's right here. It's the lot size. Okay, if we only traded 0.02 lots, which would be, let's say we were trying to only risk $100, that would be the lot size we would trade. Okay, so the first thing here is you figure out how much money do I really want to risk, and then you can figure out if a 500 pip stop is possible on your account based on the lot size you're able to trade. Okay, so if you say, okay, I want to risk $100, I want to put a 500 pip stop in, the calculation is 500 times by 0.02 times by 10, that gives you your $100. Now, to do this the other way, you just basically take $100 and to figure out that lot size, you just take $100 and then you divide that by 500. Okay, and that will tell you how much money per pip you can risk. That's going to come out at 20 cents a pip. And then, we divide that by 10 to get it to the 0.02 lot size, which will be 20 cents per pip. Okay, so we have figured it out that we can have a 500 pip stop and still only risk $100. Okay, now let me show you with a 50 pip stop how this is exactly the same. 50 pip stop, we can risk $100 as well. We calculate the same way. We would take $100 divided by 50 is going to be, we can risk $2 per pip, and that's going to be 0.2 lots. So you've got 50 times 0.2 times 10 gives you your $100. It's exactly the same. Does that make sense? The pip size here doesn't matter. Don't let that hold you back on a trade. You might have like I say, you might have a perfectly fine trade here that looks like you could make 1,000 pips on it, but you have to have a 500 pip stop. Don't think that means you have to lose a lot of money or risk a lot of money. You can still risk $100. It's the lot size that you need to make sure you're putting on correctly. Okay. Now this also, if you think about it, you can lose more money with a 50 pip stop, right? Because let's say you increase that lot size to 0.4. Okay, if you bump that up to 0.4, you've just risked twice as much money on the trade. Now you could lose $200, which is more than a 500 pip stop. So hopefully that debunks that myth for you, that the stop loss size does not determine how much money you're risking. And like I've just showed you here, a smaller stop can sometimes mean you could lose more money than a larger stop, depending on what your lot size is. Okay, so that one is pretty straightforward. Hopefully you followed that. I'll answer some questions here in a minute on that if we need to. But let's move on to the next myth. Second one is, I must trade a lot to make more profits. Okay. Now, this is a reason why a lot of traders are day trading. They're spending 8 to 10 hours or more a day watching charts and trying to find setups. They feel like that's how they're going to make a lot of money as traders. Huge myth. It's just created this massive, amount of day traders. When I'm going to show you here that the truth is that there are swing traders and position traders that might only take one trade a week, and that can actually result in more profit than a day trader could make. And the day traders are working much harder and longer to try to make their money. Okay, you'll have a day trader that will take 20, 30 trades a week, and just all he did was stare at his charts. He went up and down, and at the end of the week, sometimes they're at break even, sometimes they made a little bit, they lost a little bit. Sometimes they have a great week. But what's the difference if I just took one trade a week and did the same thing? Let's say you've traded 30 times and you've made 200 pips at the end of the week. Well, what if I took just one trade and made 200 pips? Okay. The other thing I want you to know here is, this is what I've learned from longer-term position trading, is that less drawdown can be expected per week from one trade, and so the risk per trade can actually be increased compared to a day trade. Okay, like for example, a day trader is not going to want to go in and risk more than 2 or 3% per trade. That's actually very aggressive for a day trader, because think about this: if they're risking, let's say, 2% per trade, and they trade 30 times that week, there's a very good chance that 5 of those trades could have lost all in a row. They could have this losing streak, and that's going to end up with a 10% loss just from a couple trades. And it could be worse than that. They could have multiple weeks drawdown, and you can see the idea here. When you where you have so many trades going through that you lose 5 to 10 in a row, or maybe not every single trade you lose in a row, but 14% drawdown. Okay, but with just taking one trade a week, that means you could probably bump your risk up, because if you're looking to keep your weekly drawdown under, say, 10%, you could take the trade with a 10% risk. I mean, that's pretty aggressive, but hopefully that just gives you a good example of the comparison of you don't have to trade a lot to make a lot of money. Pick one good trade for the week, and you can make just as much as any day trader, especially if you follow what I just showed you in the last myth, is calculating your lot sizes properly. And yes, that is true. You could lose 5 to 10 weeks in a row, but at least your risk then is spread out over a long period of time, and not, you're much more likely as a day trader to go through a drawdown in a week. The probability, if you compared, 30 trades to one trade, is, I'd have to walk you through some examples, but this is what I found. Others might see it differently, but with my trading, that's what I've noticed, is I go through less drawdown periods on the longer term trading than I would day trading every 5 to 10 times a day or so. And therefore I'd have to lower my risk percent per trade, of course, where on a weekly trade I might not have to do that. Okay, last myth here really quick is it possible to it is possible to double a trading account every single month? A lot of people believe this, and they are in this continuous search for that holy grail system that's going to make them a millionaire, in a couple months from compounding, doubling their account, over and over and over. Well, the problem here is that many marketers have kind of brainwashed people. They've brainwashed the industry, to think that it's reality, that you can do it consistently. When if you look at their track records, it never works more than a few months. Okay, they might have doubled it a couple times, and then they started selling their system, and then it falls apart. Okay, I'll tell you what, I've even done it. It's been a while now since I did this, but I took $1,200 to $7,500 in just a few weeks. I mean, I doubled it, just kept going up and up and up and up. But then, what happens is you're going to hit a point, since you're trading so aggressive to achieve that, you'll hit a point where you'll take a massive loss. You'll take a 30 to 50% hit, and then it kind of starts you over. And if you can't, avoid those or time it just right to pull your money out, which is very difficult, then you end up, wiping out all those profits that you worked so hard to get. So the best thing I found to do is set realistic goals on a yearly basis. And, my goal is to shoot for 100% a year, not a month, not a week. I set a realistic goal of 100% a year, and I'm risking up to 25% drawdown. So that's somewhat aggressive. Some traders might think that's too aggressive, but I'll risk up to 25% to get 100% a year. Okay, and that's extremely difficult and takes a lot of work to get there. So anybody that's trying to double their account every month is just asking for trouble. You're going to work so hard to get there, and one of the months is going to finally turn and wipe it all out. It's probably happened to many of you. Okay, so those are the couple of the myths I wanted to cover. There's a lot of other ones I could teach, but I wanted to kind of get some of the important ones out. And really quick, let's before I go into the Q&A, that's the truth. Real quick, we already covered, but it may happen once, but it won't happen consistently. So really quick, those of you that don't have our tool, this will be something you can download. It's completely free. This is a tool that it allows us to push messages to you guys like we just did today for the webinar. If we have anything important to notify you about, that'll come through a little mailbox message in the tool. But there's much more to it than that. We've got a news feed integrated with the ability to set alerts, and we're adding right now the ability for it to email you and text message you. We added a quote board, which has that functionality. And we've added the ability to mirror your trading account with My Trades. That's for our members of Forex 3D. But we're actually going to add functionality so you can mirror your own trades. So if you've got 5 accounts, you want to have them all copy one of your accounts, we have that feature coming. And I can bring this tool up really quick for those of you that don't have this. Here's the message we just pushed today. I can make this a little bit bigger. So we pushed out the message saying that the webinar was starting and gave everybody the link. So everything's in one place. Sometimes it's hard to sort through all your emails, and in here we only push important things. So as you can see, here's some of our previous messages. Whenever we get the recording up and a new blog post, we'll push those out in here. Any kind of important updates with new versions. So that's what the mailbox is for. Then here's our news feed. So you can see, I think someone in the webinar today mentioned that we have the Fed speaking, and that it'll tell you that, and it'll actually pop up a message on your screen and let you know, before the event. So I've got it set here. I can say I want it to come out 60 minutes before the news. I want an alert, and maybe I also want it 10 minutes before. And then I hit OK, and it'll pop up an alert, play a sound, and that way you're always informed of important news events. Okay, we've got the VPS section where you can add your own VPS service that you have, or you can add our own VPS service that we've set up. We've got the market sentiment, which we've done several trainings on this now. We teach you how to use real support and resistance generated by limit and stop orders in the market. And then here's the accounts tab where you can add accounts for the quote board and for the Forex 3D mirror. And then there's the quote board. And inside the quote board, like I said, you can set alerts that will actually pop-up notifications, or you can actually have it send you an email or a text message when the price reaches a certain level. Okay, so there's a lot more to come, but that's what we've got in it so far. We're actually working on adding trading functionality, so you can trade from the tool. We're working on adding charts, and this is one thing that's really cool about this is you can have the charts and the quotes and everything based on your broker. So I've got 2 accounts in here, and it shows me the quotes. If I click symbol here, it shows me the quotes for both those accounts. So I can compare price feeds. I mean, there's a lot of good stuff coming, but go ahead and get that tool downloaded. TradeWestForex.com/informer. I'll drop the link here in the chat as well. And when you're watching the replay, the link will be right below the video.